This video is how to use Binance Auto-Invest. This is a way to automate your investments over time, and you can create plans with the amount that you want to invest and the regularity. So we'll go through exactly how to use this and some of the considerations of using Binance Auto-Invest. I'll leave some timestamps down below as well. So if you do have a Binance account, it's in the Earn section, and then go to Auto-Invest right here. If you don't have a Binance account, links below to some of the exchanges that I use. You can get some deposit bonuses on them as well. A lot of exchanges now have these auto-invest plans. So auto-invest is essentially a dollar cost averaging strategy where you buy at regular intervals. And you can set this up in any way that you want using auto-invest. However, there are some other ways to do this, including portfolios and indexes as well, which I'll go through later. So very simply with auto-invest, we can choose an asset that we want to invest in over time. And the way that you do that is by choosing the asset right here. So if you want to search for the coin, you can do. So if I search for Bitcoin here, you can just press search and it comes up with that asset. Most of the major assets are supported on this. You can see them all here. And what we have essentially is the historical return on investment, or ROI. Now, what happens in the past is not what is going to happen in the future. So I wouldn't take these as, something that's going to happen in the future. You have to make the decisions on what assets that you want to go in firstly. And then if you want to set up a dollar cost averaging strategy or an auto investment strategy, you can do. So what we can see here is that over a 5-year period, we'll just look at the top 3 coins here, Bitcoin, ETH, BNB. They have returned very good returns. And this has literally been, if you look at this, a dollar cost averaging strategy of investing a certain amount at regular intervals. Now, if we go back to maybe your 1 year, you can see the percentages are different. Now, of course, the shorter time period that you invest, the less you would be expecting to make, because prices move much more over the long term versus the short term. So you can see what's been happening here, and they have very good returns. So if you want to create a plan to invest at regular intervals in these assets, we can do. We can press create a plan right here, and then we can input the details. So the first one is we can actually invest in one coin at a time or multiple coins if you want to set this up. So right here, if you press add coins, you can do that. And then let's say we want to invest in ETH as well. So we'll click that and then press confirm right here, and it adds the coin in. Now we can choose the percentage that we buy of each. So it's a percentage of what you want to invest per period. So let's say we want to invest once a week, and we want to invest, $200 a week. Well, 50% each is obviously 100 in both of these. So you can change that around to as you want. So I'll just take this one off for here. And that's obviously 100% now of the 200 that I'm investing. And for the asset that we're actually spending to buy these cryptos, click this one here. And essentially you can see a bunch of stable coins and fiat currencies right here. So depending where you are in the world, you can use your fiat currency if that is on the platform. So if you have some fiat that you've put into your spot account, then you can use that for sure. If you have stable coins here, you can use that as well. So whichever one that you have, you need that in your account. So let's just choose Tether. Now what happens, as you can see here, is that it takes the asset or the stable coin that you're spending and selling in order to buy the crypto, which is Bitcoin. It's going to take that from 2 accounts. The first is your spot wallet, and the second is your simple earn account. Why does it do that? Well, your spot wallet is just where you may keep your assets. And so they're just sitting there not doing anything, and Binance is holding them for you. However, with stable coins, you can also invest them in your simple earn wallet as well. And, Binance may give you a little bit of interest on that. Simple earn is a product where you can put the stable coins in there. You can take them out very easily. You just need to give, I think, 24 hours notice, and then it comes out of the simple earn and back into your spot wallet. So if you do have stable coins on the platform that are waiting to be invested in Bitcoin or the other assets you want to buy, some people put that in the simple earn wallet because, it may be getting, let's say 3, 4, 5% or whatever the interest rate is. And so they may as well have it in there waiting to purchase versus not, because the spot wallet doesn't pay any interest. However, with simple earn, the money is being lent out on the platform. So something to consider, you may not want to do that. But this is the default that we can have. And then this tick box here says, if I want to invest $200, but I only have $100 in my spot, you can also withdraw from Simple Earn and spend that cash on buying the asset as well. So what we have here is recurring cycle. So you can do it one time only, complete waste of time. Just go into the spot market and buy it then. If you want to know how to use Binance, I have a full guide and tutorial down in the description as well. Recurring cycle, so I'm going to have weekly, and then I'm going to buy on a Wednesday at 11 a.m. or whatever you want. And so what that's going to do is every single week, as long as you have enough of this chosen currency in your account to spend, it's going to allocate to the asset or the assets in the way that you want. So once that's done, you can come up here to the right-hand side, see all of these details, agree to the terms, and then press confirm. And that's going to set up that auto investment every single week or the time frame that you want. Auto invest is a dollar cost averaging strategy. This is opposed to a lump sum strategy. Neither of these is better. They're just different. With lump sum, you take an amount, you smash buy, and that's it, and you get the price. Most people don't do this because most of us, have a job and earn money. And so every week or month, we get paid our wage and we take a percentage of that and then try and save it and invest it. So that's why most people dollar cost average, not through choice, but because it's the only way that they actually earn the money to then save. Dollar cost averaging isn't a better strategy than lump sum. It matters when you buy the crypto. So you make the most money from buying the crypto at the cheapest price and it going up the most. And so when was the best time to buy Bitcoin? When it was worth $1. If you bought as much as you could then, you would make way more money than dollar cost averaging over time. However, like I said, most of us don't have that choice. And so dollar cost averaging is really the only thing we can do to save over time. So you can see here, lump sum versus DCA. It doesn't matter. It matters when you buy the crypto and at what price you buy the crypto. So if you do have an amount, lump sum may work. Depends when you're buying. If you're buying at the top of a bull market, lump sum may underperform. If you're buying at the bottom of a bear market, lump sum will outperform. However, if you've been in the market for a very long time, like most people want to be, for years, and dollar cost averaging is really the only thing. So setting this up to auto invest and do that without any emotions is obviously something we can use. And especially if you know that we're in a bear market, you can just say over the next 12 months, I'm going to automate that strategy and take the emotion out of it. Binance also have a broad index that users can invest in through Auto-Invest. It's known as the CMC Cryptocurrency Top 10 Equal Weighted Index. CMC is CoinMarketCap, which is a data aggregator. It's owned by Binance. And then top 10, because of the top 10 coins. So you can see them right here. And then equal weighted index. An equal weighted index is one that tries to allocate to each of the investments in an equal percentage, an equal weight. So if there's 10 coins, that will be 10% in each of those, trying to give you a kind of, unbiased exposure to the top 10 coins. Now, what happens if one of the coins drops out? Well, they will actually sell that coin and then buy the coin that has come into the top 10. Now, an equal weighted index is different to a market cap weighted index. Market cap weighted index will try and have the percentages of these assets match the relation that they have in terms of their size. So Bitcoin is the largest asset by a long way. And so if it was market cap weighted, there would be way more of your portfolio in Bitcoin than the others, right? So if Bitcoin was, let's say 60% of, this index, you would have 60% of the money in Bitcoin, and then you would have, 20%, 30% in ETH, and it would go down like that. So you'd actually allocate way less to the smaller assets. That's not what happens with equal weighted. Equal weighted has 10% in each. So it's very, very different. I personally prefer market cap weighted. The S&P 500 and the NASDAQ 100, the two most popular indexes in the world, are market cap weighted. That means that over time, you actually just put more and more of your funds into the dominant things. Now, usually that works out because the things that are dominant for a reason, and you want to keep investing in those and allocating to those because they are dominant. With equal weighted, what you can be doing is constantly selling the best assets over time and investing them into the weaker ones that are lower down. The flip side of that is that maybe these lower down ones may have some extra growth in them right now because we're in a growth industry. So we don't know that. We don't know how they're going to perform over time, of course. And so there is a difference here. The most successful indexes in the world are market cap weighted, and this is not. This is equal weighted. So what happens here is that you can view the details, but essentially you will buy these assets, every whatever you choose, and it will try to keep them at 10% each. It's done pretty well over the last few months, as you can see. These are the constituents, and you can see the historical averages of them, right? So there are some changes around, the bottom end of this. Litecoin was in, and now it got chucked out. Matic came in, Dot came in and out. So you can see link right here and in and out. So it's going to be changing these over time in terms of if they come in and out of the portfolio. This is the announcements you can see. So there was an addition of Link and a removal of Matic, but then it came back in and out again. So it's just trying to keep a rebalance of the top 10 assets. You can read more about that and how they actually weight this index and rebalance it here. This is the methodology. So I'll link this down below if you want. But very simply, top 10 assets over time, trying to keep them 10% each. So if one outperforms, it's going to be selling that, potentially buying the others. Just for some context here on equal weighted indexes as well, what you're doing with equal weighted is buying less of the winners and putting more in the losers, and not putting the bulk of your assets in the things that are winning over time. This is the S&P 500 equal weighted index. Over the last 5 years, it's up 55% and it's at an all-time high, but you can see a pretty flat performance over the last few years. If you compare that to the S&P 500, which is the market cap weighted index, that is putting more of its money into the winners over time, it's massively outperformed. It's up 81%. So for me personally, equal weighted is not the way to go, although everyone can make their decisions. This is an equal weighted index, and you have to also be aware of if there are rebalances or anything like that, will that have tax implications for you by investing in this as well? So make sure you're aware of that before getting into anything like this. Deposit bonuses to the exchanges I use, I'll link below, and some other helpful videos down there as well. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.